information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good evening and welcome to Your Money, Your Call. I'm Chris Gray. On tonight's property edition of Your Money, Your Call, it's almost tax time. With less than 4 weeks to the financial year end, what should you be doing right now to minimise your tax as much as possible? And if you're buying and selling, should you be pushing for an exchange before or after the year end? And what are the ins and outs of trusts and self-managed super funds? Do you know what's right for you? Now, also on tonight's programme, positive cash flow property. Does it really exist close to our main cities? And what will it cost you? What's on the market right now and what kind of return is it getting? Joining us on our panel of experts is Shakri Barbara, a property tax specialist, and Doug Driscoll of Starr Partners in Sydney's western suburbs. So if you've got a question about what you can do to pay less tax or want some tips on buying and selling property, then please give us a call on 1300 30 34 35, or if you prefer, send us an email to property@skynews.com.au. Welcome to the show, and welcome to you guys.
Evening.
Now, Doug, you've come on before. Tell us a bit about Starr Partners and the kind of properties you're dealing with.
We're a franchise group predominantly in the west and inner west of Sydney. We have 25 offices. We deal with sales, property management, industrial, commercial and strata, so the full spectrum, if you like.
Right, okay, that's good. Now, there's a lot of stuff in the media about the property market. There's a good, bad and ugly out there. How are you actually seeing the market at the moment?
Well, that's the $64,000 question, Chris. Look, the market's still relatively robust. It's in a fairly healthy state of repair, in my opinion. It's not quite as what it was perhaps 12 months ago, but generally speaking, it's very upbeat.
Sure. Now, in terms of the media, do you think the media paints the right picture, or are they always trying to find something newsworthy?
The latter opposed to the former. Look, there's a lot of scaremongering going on, there's no question about that. A lot of sensationalism, if you like, across the press. There's a lot of terms such as buyer's market that are being bandied around that are somewhat inappropriate in my view. I haven't seen anecdotal evidence of it being a buyer's market. So look, I think you have to take what you read in the press with a pinch of salt, I think it's fair to say.
And I guess the main thing that we see on the show, there's not one property market, is there? In different pockets and different price ranges, there's a whole wide variety of different things going on.
Oh, look, from city to city, it can differ greatly, but also suburb to suburb. I mean, we tend to deal with the western suburbs of Sydney, and that's a completely different market to the eastern suburbs. So yes, you have to be very cautious in terms of being specific about the markets themselves. And
we'll go into some more detail later on. Shakri, you're a specialist dealing with, obviously accounting, but dealing with a lot of property investing clients.
That's right.
Do you want to give the viewers a bit of an idea about kind of what kind of people you're dealing with in your practice?
We deal from mums and dads and a lot of people who are on a journey to create wealth using property as a class of asset. That's primarily who I try and focus on, and that's who we have in the clientele.
And what difference does it make going to an accountant who's specialising with property investors? Kind of how different can the advice be?
The advice it's the experience that he has in seeing a lot of similar type of situations, so your response can be a lot more considered and a lot more appropriate for your circumstances.
Because with accounting, is there a right and a wrong answer, or does it depend on where you've come from and a whole bunch of other different things, I guess?
Overall, especially where you're looking at a lot of tax situations, the personal circumstances of each individual or each group has to start off first, and then you look at what the circumstances are, and slowly you build it up to where you want to go.
Sure. Now, obviously, it's getting towards the end of the financial year. What does that mean for tax returns? Do we need to panic and do them straight away, or have we got the next 6 to 12 months to do it?
Generally, the tax office would like everybody to lodge their tax returns by the 31st of October. After the financial year ends on the 30th of June. However, tax agents can't do everybody's work by the 31st of October, so they have extensions, and tax office gives them program. Generally, people who have to pay money get to pay early, and people who get a refund are allowed to lodge a lot later.
Right, okay. And so if you're going to get a refund or you're going to pay tax, does that dictate when you should try and get your tax return in, or is it just good to get it in anyway?
Yes, my advice to clients is that cash is king all the time. So if you are going to have or expected to have a tax refund, then you would want to lodge very quickly, get your refund. Also, you've got, if you're prepaying any expenses, then the time difference between the time you repay and the time you get a refund is very short. So if you prepay something in June and you go and get your refund in July, that's great. If for your cash flow, you can use that money to either pay interest or go on holidays.
Sure. Holidays always sounds good, especially as it's so cold at the moment. Now, Doug, typically the media are always talking about auction clearance rates to describe how the property market's going on. To start with the western suburbs, is it typically auction areas or kind of private treaty sales?
I think it's probably 75% auction and 25% private treaty. But I mean, the media as a whole, they talk about clearance rates as being an accurate barometer. Obviously, because there's differentiations between the marketplaces themselves, I wouldn't use it as the holy grail as such. Things like days on market are perhaps a more accurate barometer. To give you some idea, this time last year, days on the market were about 41 days for the average Australian property, and it's now working at about 45, 46. So personally, I tend to look at that as a more accurate gauge of the market as a whole.
And how do people get that number? Because, as you say, it's not reported in the media. Is it something that the individual sales officers use quite a bit, and that's how you see how your salespeople are going?
They're starting to do so. I mean, there's a plethora of information available online now, so you can go to the likes of realestate.com, the likes of RP Data, and they'll provide that information for you. So it's easily accessible for the consumer.
Right, okay. And if you were to describe the market at the moment, do you think it's grown this year or is it going backwards? Again, depending on where you look, you get a completely different answer.
Well, obviously I can only really comment on our demographic, which is sort of inner west and greater west of Sydney, but for our area it's probably grown by maybe 2, possibly 3% year to date. So look, minimal growth, but at least it's there.
Yeah, at least it's positive.
Yeah, absolutely.
Now, Shakra, there's obviously a number of people still trying to sell properties at the moment. Is it important, if you're making a profit or loss on the property, to kind of exchange or settle this side of the financial year or next side? And is it really exchange or settlement that is the key date that the tax office looks at?
Chris, that's exactly right. If you have made, or if you're expecting to make within the next week or so, because there's not much time to settle between now and the end of the year, let's assume that you have sold the property during the year and you have created or derived a capital gain, then it's very important to look at your other circumstances. And if you have a dud property or some dud shares that are carrying losses, and you don't want to pay tax on the capital gain, of course you can only offset capital gains against capital losses. So if you sell that before the 30th of June, then you can offset against the capital gain and hopefully you will not pay much tax. The critical date though for any contract, particularly for property, is the contract date and not the settlement date. So you've got a month between now and the end of the year in order to settle a lost property, let's say, if you're going that way. Very important.
So even if you've got an auction date, say on the 1st of July or something, and it's probably good advice to go and see your accountant just to check when you should be doing it, and maybe worth taking an early sale, even if it's maybe potentially less of a price, to guarantee to reduce your tax at the same time.
If it fits in within the rest of your circumstances, and that would suit. On the other hand, sometimes it's more advantageous to, depending on your circumstances, to actually sign that contract on the 1st of July. Because if there is a capital gain, then you have nearly 18 months before you lodge your next tax return and hence pay the tax. In that process, you've actually got the cash, the capital gain cash, to do another project with.
Now, it seems very straightforward for us to go and get the advice before you go and sell the property, but most people don't do it that way, do they?
Well, it's really important to talk to your advisor, your accountant, first before you go in, because they know, or at least you can explain to them what their circumstances are. So a lot of people have changed circumstances, and therefore the result will affect them and impact on them in different ways.
Yeah. It's a funny topic, talking about getting this financial advice before, because I was actually speaking to one of the newspapers in Queensland during the week, and they were saying that in Queensland, and I'm not sure if it's true or not, that quite often the agent will have a standard contract and they'll just go and sign it up with the clients and sell the property without even necessarily dealing with the solicitor, and the solicitor deals with them afterwards. Whereas obviously New South Wales, the contract is generally done through a solicitor, isn't it, rather than through the agent?
Yeah.
So it just seemed to be very dangerous to me that people could be selling $500,000, $1 million homes without seeing their accountant, without seeing a solicitor, and with all due respect to the estate agents, getting a salesperson to go and sell it without that advice. But it's got to be good advice to get it up front, isn't it?
For sure, yeah.
Yeah.